welcome to this session, which we will discuss Japan's investment landscape. I am Naomi Takegoshi from FinCity.Tokyo. A quick word about FinCity.Tokyo. We are a semi-public organization funded by the Tokyo Metropolitan Government to promote Tokyo as a financial hub. And we have been working with iConnections from last year. And we're really grateful for this platform today, where we just talk about Japan. So let me first ask each panelist to quickly introduce themselves. So shall we start with Kengo-san?
Right, yes, thank you. Hi, thank you for having me. It's my pleasure to be here. My name is Kengo from Tokyo Stock Exchange. And yeah, we run public equity market, of course. And what we recently focus in is, as our exchange, is corporate governance reform. So we are trying to make Japan market more investable. And my role is to speak with both domestic Japanese institutional investors and also global investors. And yeah, I'll keep giving updates to them what is happening in Japan right now, what are our next steps, what has improved, what are our challenges, these kind of things. And at the same time, I collect a lot of opinions from global investors because we're always seeking what our next action should be. So yes, and I work handling globe with the rulemaking departments called listing departments, and they are the one who decide our next action. So what I do is to provide them the voice of investors and to decide what our next action should be. So yeah. Yes, that's pretty much what I do.
Thanks so much. Then moving on to Philip.
Yeah, good morning, everybody. I'm Philip Partnow. I'm originally from the United States. I've been in the region since 1997, and I've spent about 18 years in Tokyo out of those years. I speak Japanese fluently. I had a pretty long career as an M&A professional with UBS Investment Bank in the region. And then starting in 2014, at the very beginning of the corporate governance revolution in Japan, I was advising a couple of different major foreign activist investors on their activist investment strategy in Japan. Starting earlier this year in March, I launched Chronus Capital Advisors with my Japanese partner, Jun Suetomi. Jun also has about 10 years of experience advising other well-regarded foreign activists. So together we've been involved in the engagement space for about 20 years. And our idea behind Chronus Capital Advisors is that with the growth in the M&A market in Japan, we want to take a very focused approach on targeting situations where we think the company is deeply undervalued, where there's some change catalysts or change agents already present in the situation. And then we target our engagement towards trying to unlock value by catalyzing an event. In practice, it's a little bit more complicated than that, but that's the elevator pitch.
Yeah, thank you very much. So, Kaoru-san, please.
Hi, my name is Kaoru Onishi. I'm from Nissay Asset Management, which is a wholly subsidiary of Nippon Life Insurance Company, which is the largest insurance company in Japan. And we are managing the general account for Nippon Life Insurance Company, and also providing the management services for Japanese pension clients as well. And my role is I'm covering all external manager investment, including the alternative investment like private equity, infrastructure, and like a hedge fund. And so all of the external manager exposure is about 60 billion at this moment. Yes.
Thank you very much. Right, then let's kickstart the discussion. So I first want to turn to Kengo-san. Yeah, so you are responsible for global marketing sales for the Tokyo Stock Exchange. So why should investors care about Tokyo listed companies?
Yes, short and simple answer, because there are a lot of opportunities and upsides. Japanese companies suffer for more than around 30 years deflation period, and during that period, Japanese companies tend to avoids taking the risks. And what happened in the end is that the typical reaction was that many companies, think the cash is king. So a lot of companies currently sitting a huge cash on the balance sheets, and in that sense, that is not what investors are looking for. Because investors want, as our exchange, we want company to improve their capital efficiency more, because it's not deflation period anymore, right? Because the inflation is picking up, and so we thought Japanese company should listen to investors' voice, open their minds, open their eyes to the capital market more. So that's the first thing that we, came up with. And 2.5 years ago, we made a request to Japanese companies. The name of the request is a capital efficiency improvement request, which is simple and easy to understand. So yeah, and we request company to basically take 3 steps. The first step is to analyze the company's current situation from investors' perspective. What is the ideal balance sheet should be? What's the ideal business portfolio should be? Those kind of things. And also the second step we asked them to take is to make an improvement plan and disclose. So once company discloses the improvement plan, investor can take a look at that plan and start having constructive dialogue with companies. Some investor might think, oh, why do you do this? Why don't you do this? Right? Those kind of constructive dialogue. And third step is just to execute the plan.
Yeah.
So that's what we made. That's what we requested to the company. And currently, more than 90% of the prime market company reacted our response, which means they took first step to enhance their corporate value. And in addition to that, our goal as our exchange is a market cap. It's all about market cap, because we believe once company, once company improve their capital efficiency, are having constructive dialogue with investors, that leads to their stock. That gives a positive effect to the stock price, and the market cap goes up.
Yeah. Thanks very much for explaining these changes, which actually nicely segues into Philip, who has, from his self-intro, been working with the Japanese capital market for nearly 20 years. So, yeah, you're probably witnessing these changes. And we hear a lot of this, this time is different mantra in Japan. So from your perspective, how have you seen the Japanese capital market evolving?
Yeah, thank you. So I think there are a few points. So for those of us who have been in the market for a long time, the changes and the circumstances that we see in today's Japanese capital market are the result of a reform initiative that started back in 2013, 2014, with the publication of the Corporate Governance Code and the Stewardship Code. And at that time, when they first came out, people were a little bit skeptical about whether it would actually get traction. And in the early days, it was a little bit quiet still. But what we've seen, a couple of things happened after that. One is that various regulators have taken other actions to build on that reform initiative and to create more reform momentum. So we've seen the METI, for example, tightening up the rules about how M&A works for public companies. We've seen GPIF pressure domestic asset managers to be transparent in their voting results so they can hold them accountable for whether they vote for or against value-enhancing shareholder proposals. And then most recently, this action by TSE, which, when it came out, no one was really sure how much the Japanese companies would respond. But I think everybody who looks at the market will say that they've responded really dramatically and well in excess of what people were expecting. So the TSE has really kind of hit it just right. Now, what's happened in response to that is that we've seen a lot of activist managers coming in and developing in Japan. The AUM of the activist managers has been going up and up and up. And then, of course, private equity has taken note and said, wow, if there are activists pushing Japanese companies to shed non-core divisions or to delist, there are going to be more opportunities for us. So the amount of PE managers and the amount of capital for PE has also been going up. And that's creating kind of a virtuous cycle in the marketplace. And it creates more opportunities for both the activist managers and the PE on the other side. So to give an example of a recent situation that we've gotten involved with, there was a company that I've been looking at for 10 years, and I've always avoided investing in them because they had a very locked up share register where they're about 40% of the stock held by other Allegiant shareholders. And a few weeks ago, they announced they were doing a marketed sell down of about 20% of their share register because some of their cross shareholders needed to sell their shares. Well, why did they have to do this? Well, one of their largest cross shareholders itself has been under attack by a different activist to increase its capital efficiency. And so we think what happened is that shareholder went to the company and said, we need to sell your shares. The company went around, talked to their other shareholders, and they said, yeah, we need to do the same. And so now 20% of that share register has just changed hands. It changed hands at a discount, and we were able to buy a nice little allocation at a discount to the market price, and it's up about 5% from when we got in. But more importantly, this company is now much more exposed to the influence of rational investors and much less protected. And so it's a great angle to go in and engage with them. And in fact, part of the reason for this company's undervaluation is they themselves own a lot of stock in these companies that just sold their stock. So it's very natural to go in and say, well, they sold their stock in you should probably sell your stock in them and get your capital efficiency up. So it's the TSE's action, other activists, and then other situations getting unlocked following on from that.
Yeah. So we've heard a lot about these positive changes, and actually the proof's in the pudding. The Tokyo, the Nikkei average, it's been above 50,000 yen. We're talking about Takaichi trade with the arrival of a new female prime minister, which is quite a game changer in Japan. We've seen these changes, but going forward, what has the Tokyo Stock Exchange, JPX, have under their sleeves for next changes?
Right. Yeah. First of all, yes. The first point is that we keep communicating with investors. We go abroad almost every month, inviting, trying to attract them to Japan markets, and that's what we do usually. And as a next step, the second point is that we are trying to make more we're trying to enhance the dialogue between company and investors. So we provide tools to those players. Last year, we published case studies. If you can Google the Tokyo Stock Exchange case studies, you can see a lot of case studies that we published. And we published good case studies and bad case studies. In good case studies, we actually include the name of the company. And for the bad case studies, we didn't because we're nice. But yes, so we provide those tools to company and investors, and they can use those kind of tools to have more constructive dialogue. What is the best practice in the market? What is the bad case studies? So, we're trying to update those tools to enhance more dialogue between company and investors. So yes, that's the main thing that we're going to do next.
Yeah, thank you very much. So now I want to turn to Kaoru-san. So governance reform, which we discussed a lot, and the increase in engagement, activist activities that could lead to more go private or divesting non-core business. So that gives very fertile ground for PE investment. So would you like to share your observation, how it's been impacting private equity business?
Yeah. So in terms of the private equity market in Japan, I think opportunity is dramatically increasing at this moment. As it mentioned, the governance reform drives the business leaders focusing on the more ROE expansion and also the improvement for the core business. That means maybe management have to carve out their some businesses and take private things. So, and activists is really pushing the company to more improvement and a lot of things. So interesting is number of the activists is really increased. Like in 2014, it's 8 activists exist, but now it's like 74 activists. And proposal for the equity is, shareholder proposal is increased from 8 to 200 recently. So this is a huge pressure for the shareholder. And there is takeover bid. Takeover bid without notice also exists, and TSE reforms. And my understanding is last 2 decades, the US and Europe listed company, number of the listed company was reduced to half. But in Japan, the listed company was doubled. So that's really huge difference with the US and Europe and Japan. And, but recently, the private company is just exceeded the listed number of the company. So I think the privatization, private is more and more increased next few years, and the private equity is kind of a strategic partner with the private company. So they help the company to value up, and they help the company to improve the business. So it's really a win-win situation for the private equity and the private company. So I think it's a really interesting moment for Japanese private equity market. And just one thing I would like to add is there is a lot of mid-small cap companies in Japan, and it's like a 1.5 million company exists. And average business leader is 65 years old. So there is no successor exists at those companies. So the more roles for the private equity is expanding, and they are waiting the maybe private equity firm maybe provides the support for those companies. So that's really the good situation for the private at this moment. So I'm really excited about the private market as well.
Yeah, and when it comes to PE players, well, you have some of the large Japanese pioneers like Advantage Partners, but then there was an influx of a lot of these global players, the Carlyles, the KKRs, etc. But I think we're seeing more Japanese GPs as well in PE, and I heard that Nissay is looking at a fund that's investing in Japanese GPs to capture the opportunities in PE. Would you like to comment on that?
Yes, so large global players already in Japan, and they are targeting more larger deals and carve-out deals and the international companies. So smaller Japanese private equity firm is more targeting like a mid-small cap, like no successor companies or small carve-out things. So it's maybe focus area is a little bit different. And recently, more and more like GPs coming to Japan and trying to create the deal for like a pan-Atlantic deal, or they are investing in the company who also have the angle in Japan. So I think the number of GPs is also increasing, and the fund targeting in Japan is it's a little bit expanding. Yes.
Yeah. So we're seeing both growth of local GPs as well as foreign, international ones coming in. Right. So yes, Nissay has been a very sophisticated investor. You have been working with a lot of foreign GPs. And recently, the Japanese government introduced the asset owner's principle under the recognition that changing the asset owners would result in having a more diversified and skilled up asset management industry ecosystem. So, so you're also a GP, so you interact with a lot of Japanese asset owners. Are you seeing any behavioral changes amongst asset owners in allocating to alternatives?
For us,
yes, yeah,
our changes.
Yes.
So like we are long history investing in the private equity, but for this kind of asset owner nation request the insurance companies enhance the investment capabilities. So we pile up our alternative invest capabilities and the credit investment capabilities inside in the asset management company, and we are managing the group insurance companies' investment for alternative investment. So those types of like aggregating the capability creates a more enhancement and maybe the taking the scale, investing in the alternative product, like discounting the fees and a little bit attribute to the return enhancement.
Yes. So working with overseas asset managers, do you see any areas, topics, themes that could be interesting for asset owners like yourselves?
For asset owner, for ourselves, we are more focusing on like Japan because we should have more home country bias because yen is really depreciated at this moment, and but we don't want to take currency risk a lot. So that means Japan is a more attractive opportunities exist for the maybe private area and also the venture investment area as well. And more and more like GPs is interested in the Japanese venture technology area, which is like innovative, maybe new ideas or breakthrough type technologies coming out from Japan. So we would like to support that area as well.
Yeah, okay. Right. So we talked earlier a little bit about, yes, the improvements in more transparency, more taking into account the investor's perspective in the capital markets. So, Philip, is there any final ask? What one change would you like to see to accelerate this momentum further?
Quickly, I want to get away with two.
Yeah.
So one is, and Kengo-san probably thinks I'm a broken record about this, but more director training. A lot of times, especially the independent directors don't really understand what their fiduciary duties are. And I think we need to encourage the companies to get proper training for their entire boards, but especially the independent directors. And the second, recently there have been a number of MBOs announced where market participants think that the price has been undervalued. So finally, the big event has come and there is a premium being paid, but people still think it's way too cheap. It's very difficult to identify exactly what to do to fix this, but somehow or other, I think some combination of regulators and market participants need to work on this to ensure more transparent and market-oriented pricing of M&A deals.
Yeah, thank you. Is there anything you'd like to add?
Yeah, thank you. Yeah, we often said that we are in the second inning. It's a baseball expression. So baseball have 9 innings. So we're the progress of the whole reform is we think we're at the second inning. We have a lot of things to do still. We have a lot of things to do. The director trainings or the process of the MBO is exactly the homework that we still have. And yes, one thing that I would like to add on that is that company should more focus. I mean, we won't change the company's mindset. We want company to pay more attention to investors' voice. So basically, the education is one of the points that we have to tackle. I'm sure it takes time. It's not going to happen overnight. But we're, as I said, we're in the second inning, so we keep focusing on those points. Yeah.
Yeah, thank you. Actually, yeah, if this panel was much longer, we probably would have loved to delve into the small and mid-cap space, as Kaoru-san was talking about, the number of decline in the listed companies in the States and Europe. Actually, in Japan, we've got like 3,800 listed companies, but TSE now has stringent rules for companies who don't achieve a certain market cap. They have to delist. So there's a lot of pressure, actually, creating further opportunities, I suppose, for the private equities and engagement space. So it's lots of opportunities. And so I think it was a short session, but we were able to cover the stock exchange reform happening at the top, and then that spurring more engagement activities, and as a result of shedding the non-core business, resulting in PE activities. So Japan is an asset management nation, a government policy. We are steadily seeing it in action. So thank you very much for joining us. I hope you had some takeaways with you, and please enjoy the rest of the conference. Thank you very much.